Good afternoon. Rhonda and Scott back again, just to give you a little more information about being long-term investors, or even if you don't think you have long-term investors or planning for the rest of your life. That's what we're in the business of doing, making sure you have a plan that will get you where you want to be, that you have income all of your retirement, and that you leave behind a legacy to the people and causes that you care about. That's what financial planning is all about, putting your money, using it as love for the next generations. That's what we're here for. But Scott, I thought I'd start by asking you, when is it going to be over? When is it going to start back up?
Who knows, right? I think anybody that could tell you that they know, I think they'd be lying, right? I guess you could have a commentator on TV that might get lucky and pick the bottom or pick the peak. But the problem with timing or trying to time the market is you got to be right twice, right? You got to know when the market's at its absolute peak, sell your investments there. And then I think the harder part is knowing when the market has hit its rock bottom, but more importantly, having the courage to reinvest at the bottom, right? We can all talk the talk and walk the walk and be all big and mighty and say we're going to pick the peak, but having the courage to reinvest when the market is in volatile times, when it's down, where it's dipping, where every channel you turn on has got news that the Dow was plummeted or this and that, negativity everywhere you go, Facebook, social media, you go to the gym, the guy next to you on the treadmill is talking about how bad the market is, this and that. Would you really have the courage to get back in, right? And statistics show the facts are no, most folks don't, right? And that's why timing doesn't work. That's why we believe in being invested through the ups and the downs. So while I don't know when this event that we're in right now, it's a market correction, it's teetering on becoming a bear market, certainly could. When will it end? How far will it go? I don't know. And I'm okay with admitting that and saying that because that's the truth. But I do know history showing me time and time again that the market goes up and down on its way up. Market corrections on average happen once every 12 to 18 months. Bear markets happen on average once every 3 to 4 years. So these are normal market cycles. The market has never just gone like this. I wish it did, but we'd all be millionaires, and that's just not the world, right? That's not the way that things work. It goes up and down on its way up. And that's when I think Rhonda and I, these are the moments where we earn our keep, is being here to be your guides, to take all the noise, all the headlines, all the scariness, push that away, push the emotions away, and instead focus on the plan. What are we trying to achieve here? Are we trying to achieve a retirement that's going to give us growing income over time? Well, then if that's the case, then we probably shouldn't just react because the market's down this month, last month, or next month, right? We should focus on what the long-term objectives are. And that's our job. And that's what we're doing day in and day out, helping hardworking folks just like you, just like your colleagues, many of your friends, family, coworkers, helping them do just that.
I know a question that I've gotten a few times, and I imagine you have too, Scott. What about those folks who are about to retire, or they just retired and they're taking income, they don't have a paycheck anymore? What do you tell them? How do you help them feel better about being a long-term investor when suddenly you're taking money out, you're not putting it back?
Well, first off, is certainly I understand. I've never been in that situation personally. I've never retired and been there. But looking at it from a financial planning standpoint, I can understand how that could be stressful and scary. You've just retired. Maybe you retired at the end of 2021. You started taking income and then the market went the other direction, right? That could be scary. Or maybe you're planning on retiring this year in 2022 and the market has done what? It's gone the other way, right? That could be a very scary thing to go through. But reminding folks that we're not just taking income for this week, next month, the next 6 months, we're planning on taking income for a very long time, right? If we retire in our mid 60s or late 50s, well, the goal is that if it's a married couple of two, one of the two of you is going to live to be 90 years old, right? So we've got to have assets invested to grow over time to be able to give you income, and more importantly, give you income that can increase over time. Because what have we learned in 2022, right? We've learned, number one, volatility, it's not always fun, right? Sometimes it goes like this. Last year it was like this, right? But secondly, we've learned that things can cost more, whether it's going to the gas pump, whether it's buying eggs, whether it's buying a new car, buying a house, things cost more as time goes by, right? So we've got to have an income that can keep up with that. So being there to help those folks who've just retired or looking at retiring, to me, that is critically important. That's what I get a lot of enjoyment out of, is helping folks through those moments, giving them some reassurance. So if you're in that situation yourself and you want to talk, please reach out to us. This is what we're here for, to help guide folks through the times when there's noise everywhere you go. You got to turn that noise off, focus on the plan, not focus on the headline of what the TV says, whether it's Fox, CNN, Newsmax, you name it. I think they're all pushing an agenda. Focus on the plan, not on the headline.
Well, one thing that the question that I know that I have gotten a lot over the years is, well, how can you tell me that it won't go to zero? How can you tell me, I understand a bear market, it might go down 20% or 30%, stay down for longer than I want it to stay down, but how can you tell me it won't go away?
Well, for starters, I can't promise you that the market won't go to zero, right? But I would say if the market went to zero, the world that you and I know doesn't exist anymore. And it wouldn't matter whether the market, whatever you had in the market, right? We'd go back to the world of how many chickens does Rhonda have so I can get some eggs? How many cows does Scott and Whitney have so we can get some milk? You know, asking a coworker here, how many goats do you have so we can make some cheese? I mean, all this crazy stuff, right? We would be going back to that, because the market, what we own inside our investments is owning pieces of companies, right? So you're owning a piece of company that even if the market's down, even if prices are up, I think we're all still going to the grocery store. We're all still buying clothes. We're not, you know, all of a sudden walking around naked, right? We're all still putting gas in our car. Now, are we maybe not putting as much gas in our car? Maybe we're limiting our travel, maybe, but we still have to put gas in our car to go from point A to point B. All these things, we're still spending money. So the economy is still moving. These companies are still worth something, right? So if it were to go to zero, that would mean that everything that you and I know is all of a sudden worth nothing. And I can't fathom that. So that's how I would debunk that. It's an honest question. I can't promise you that it won't happen, but I can't imagine that it would and what it would look like. And it wouldn't matter about our investments. I would just hope that you had a lot of chickens, and you would hope I had a lot of cows, and somebody had some timber, and we could find a way to make this work, right?
Yeah. Along those lines, with the prices going up, shouldn't we be doing something to hedge against inflation? I get that question a good bit.
Well, we are doing that, right? By being invested, we are hedging against inflation. Now, in moments like this where the market is down, yes, account values are down. But if you look at them historically over time, say you've been an investor for 5 or 10 years, just using the S&P 500, right? 10 years. Well, if you had $10,000 in the S&P 10 years ago and you didn't take anything out, you got a whole lot more than $10,000 today, right? If you were taking income, and a reasonable amount of income that would allow for you to replace it over time, you would have replaced the income that you took out and still grown that investment slightly, right? So staying invested using equities, they're the only things over time that have kept up with inflation and outpaced it, right? You look at something like what people might say would be a hedge against inflation, or a hedge, a safety, gold. I get the gold question a lot, right? Gold, gold, gold. An ounce of gold 100 years ago would buy you a fancy suit. An ounce of gold today would buy you a fancy suit. All right, so it kept up with that price, but it didn't give you any increasing purchasing power, right? Well, I don't want to own an ounce of gold for 100 years and only be able to buy one suit. If I was going to own it for 100 years, I want to be able to buy 10, 20, 30, 40 suits, right? It didn't give you any kind of increasing purchasing power. Equities over that same time period would have given you increasing purchasing power. So that's how you hedge against it, right? You've got to be invested for growth over time. Now, of course, you need some cash in your portfolio. You need some bonds. There's a place for all of that, but you can't not have something in the market if you want growth over time that's going to outpace inflation and give you income that can grow. That's my honest belief.
Yeah, me too. I think that, you know, the hardest things in the world are to hear all the noise and do nothing. because the urgency is just, we're hit with it all day long, that we should be doing something. We should be doing something. We should, we should do something about this political situation, or we should do something about this market situation. And doing nothing is really hard when we're bombarded with so many messages. I think, the principles that I think that you would agree are the most important: be diversified, have a plan, have an advisor to keep your decisions based on your plan, not based on emotions. What else would you say are most important things for folks to do in times like these? How can you ignore the noise?
Well, I think we live in a world where we're bombarded by noise, right? And that's certainly made things harder. Because not only do we have it on our TV, we have it on our computers, we have it right here in our pocket, right? Everywhere we go is noise, noise, noise. But we've got to take that and we've got to set it aside and make rational decisions when it comes to investing versus emotional decisions, right? Because the commentator on TV, the headline they're pushing today is not to give you information, at least not my belief. They're there to get you to tune back in tomorrow and the next day and the next day. So again, whether you watch CNN, Fox, Newsmax, MSNBC, whatever it is, they want you to tune back in, because guess what? Those 5-minute breaks in the middle between commentator and commentator, that's how they pay the bills, right? The more people that watch, the more income they have coming in from that. Or on a Facebook or a Twitter, when you click on that link, you've clicked through, there's revenue generated for somebody there for doing that, right? So you got to take all that stuff out and know that those are agendas that are being pushed to steer you or scare you one way or the other. Focus on the plan. Work with an advisor that you trust, somebody that's been doing this through good times, bad times, and everything else. Work with money managers that have a proven track record, right? When I pick money managers that Rhonda and I work with, we're looking for somebody that's got a track record of investing through good times, bad times, times where the market was essentially flat, horrendous times like a 2008 or a 2009, all those kind of things. That's what we're looking for, because I want somebody that has a track record of giving successful and proven results through those periods of time. So it's very hard to turn the noise off. That's where I think Rhonda and I go into overdrive. That's what we hopped on here today to give you some of our commentary, to be here to reassure you with that. But turning the noise off is the hardest thing to do in today's world. But you touched on it a second ago, turning it off, doing nothing, and instead just focusing on the plan. And if the plan says we're going to be invested for the long haul, sticking with it and doing just that is doing something. So turning off the noise, much easier said than done. We used to joke years ago, and I know you've said this for years, turn off the news, turn on Andy Griffith. I did that the other day. I'm not going to lie. Andy Griffith still does the trick, right? When the world is full of noise, get on there, pull it up on cable, pull it up on, Netflix, Hulu, whatever subscription service you use, find Andy Griffith. You'll be laughing in 2 or 3 minutes. You'll forget what's going on. The noise will go away.
You know me. I love stories, Scott. That's who I am. I tell stories to share information. But one of the funniest stories that we shared in our office the other day was a client who's been our client probably 20 years. I know you went to visit him once when you first started with me. We drove a little ways to go see him, and he called in and wanted to know if he could speak to anybody but Rhonda or Scott, because he wanted someone to tell him something different than what we've always told him for 20 years. And the person who talked to him said, well, I can't tell you anything different. This is what I believe too. And he said, okay, I guess that's what I needed to hear. I wish we had new ways of saying it, but it is the same. Have a plan, be diversified, stick to the plan, make changes to your plan when your life changes, and
Not
just
because of a headline,
not because
not
of a
like
headline. Yeah. I saw a friend of mine likened it to, it's scary when you first start driving. Well, we're not rookie drivers. We've been driving this same road for a really long time, and we know what works and we know what doesn't work. We certainly can't tell you when it's going to be over or when it's going to start or how bad it's going to be or how great it's going to be. We can just tell you that we know what works in the long run. So, and we appreciate all of the folks who've gotten on the bus behind us and let us take them there.
Absolutely. No, we appreciate everybody who allows us to help them create those plans, and help them stay focused on it right through these times. This is what we're here for. We've talked about it. This is when we earn our keep. If you need reassurance, if you want to talk to somebody, call us, let us know. This is what we do day in and day out. Let us be here to remind you of the importance of staying focused on that plan and not on the headlines of today. We're going to jump off now, but we'll probably be back here in the next couple of days or weeks to share more commentary with what's going on, volatility, all those kind of things. If you liked what you saw, please share it, give it a like, share it with a friend, give us comments, all those kind of things. Let us know things you'd like for us to talk about in the future if we hop back on here. And as Rhonda said, thank you guys so much for allowing us to be your advisors, be your planners, to be here with you. And we're going to make it through this as we've made it through all those other times before. It's just turning off that noise and instead focusing on the plan. Hope everybody has a great day.
One more point. We're always looking for new ways to communicate. If you haven't liked us on Facebook and you got this message in an email or from a friend, go like us on Facebook or Instagram. Be looking for, we have a podcast coming. We'll be publishing those once every 2 weeks. Is that right, Scott?
I think so. Yeah, it's going to break out sometime this summer. Look for it in June or July, but it's in the making and it'll be here soon.
Yeah. So call us if you'd like to sit down and talk with us face to face. Call us if you just like a phone call just to hear our voices, knowing that we're going to say the same thing, and just stop by and see us sometime.
Absolutely. Well, listen, I hope everybody has a great day. Know that we're here for you. We look forward to talking to you real soon.
Okay. Bye.